Raamdeo Agrawal, Chairman and co-founder of Motilal Oswal, is with us, so we need to go across to that conversation. Mr. Agrawal, great having you. Thanks so much for taking the time out. What is your initial assessment of the budget? The market seems to have taken a budget with capital gains tax being hiked rather well.
Yes. So, Neeraj, I would say that it was in any case expected to be a capital market heavy budget, and FM has delivered to that promise. So long term has been increased, short term has been increased, STT has been marginally increased. So clearly there is a, I was a bit disappointed with the increase in the long term taxation. Not that it hurts me a lot, just that the asset class should be encouraged. When the SIP flow is coming, the whole nation is becoming very inclusive, and it's a fundamentally a long-term kind of a story. And there, I think they should not have changed the long-term capital gains tax from 10 to 12. Short-term, speculative, whatever you do. So otherwise, I think it's a consumption-oriented budget. They've given something to everybody. So I think that consumption boost will come to some extent. And the guys who make money in the market, see, market-facing economics has not changed fundamentally. They have not changed the market-facing economics. Only thing is, after you made money, you pay a little more taxes, which is kind of not an unfair kind of expectation.
Mr. Agrawal, very good afternoon, and great to have your take. In terms of just what the impact is of capital gains, do you think that this initial hit will sort of recede? The market will be able to digest it after a point? And are you disappointed that they've tinkered with long-term capital gains tax, or was that coming sooner or later?
Yeah, so that's what I was saying, that they have not changed materially the market-facing economics. When I come to the market, first I need to make money, then only I pay taxes. So my market-facing economics remains same. Basically, yes, there is some amount of change in the STT for I think high-frequency traders will pay a lot more than what they are paying. So I think they have hit the heart of excessive trading. I think that's where the trader may pay a small amount, but actually government will get a lot of money out of that change in STT. That's my sense. Second, I think the capital gains tax, I think every level has been increased, long as well as short. So I think it's a long-term change, and people have to get reconciled to paying a little higher tax only if they make money in the market. The issue is whether you make money in the market or not, and that is not dependent on your taxation charges. It is dependent on what happens to the corporate earnings, and I think corporate earnings will definitely get a boost out of the consumption which will be there across the board thanks to what concessions they have given.
Are you seeing enough, Mr. Agrawal, to really boost the consumption story in a longer view? I mean, today we might be seeing a very momentary response in that space and in those stocks because of what they've done on employment or the new tax regime, etc. Do you think enough has been done to really move the needle? Because we've been talking about consumption at the bottom of the pyramid needing that boost.
See, this consumption or GDP growth consumption pickup, I mean, it's a multifaceted kind of thing. I mean, it's not the one thing, one taxation benefit here or there that's going to impact. I think a good monsoon across, RBI governor is already saying that the rural demand is picking up recently. So I think the good monsoon and now widespread benefit to the masses, whether it is standard deduction or lower tax rate or stipend and the job subsidy. So all those things will over a period of time should give boost to the consumption, and that will see the FMCG companies or consumer companies which are not doing well. I think that's where I think you'll get some earnings pickup over a period of time. So my sense is, on the whole, it will be accretive to the corporate earnings. But some kind of a little more taxation for the people who are making money in the stock market.
Mr. Agrawal, hi, it's also Samina joining in. So it's back to business then. Budget is behind us. Where from here? What should investors be doing? Does the budget give us an excuse to correct from here, take profits off the table? Or will the fact that it's a neat, clean, fiscally well-consolidated budget give the market the impetus for the next leg of the rally from here on?
Yeah. I don't think there is any impact to the market outlook. I mean, whatever was the outlook before the budget, I think it remains fully intact. Because right now market outlook is dependent on whatever the corporate earnings expected for next 1 year. I would think that corporate earnings will get little bit, almost 0.5% to 1% boost out of this budget. Second, I think the flow, which is going to determine the overall demand for the securities, that remains intact. So I would think that if market has to grow at the rate of 15% for next 5 years, that doesn't get impacted at all. So the true investors who are coming through SIP revolution, which is on, I think they must continue and they must make sure that in the next month or so, if there is a correction in the market, then also they continue with their SIP. So I would think it's a perfectly healthy environment for long-term investing.
Mr. Agrawal, there was a lot of talk of how the money or the extra bonanza from the Reserve Bank would be used. It seems that, and because there's only 8 months left, there isn't as much capex that could be done. So it seems that the government has opted for higher fiscal consolidation. Is this a nudge to global rating agencies as well, that we are doing something which the other global nations aren't quite doing?
I would think so, but we have to listen to the interviews of the finance secretary and FM of the post-budget presentations and what strategy went behind in terms of fiscal consolidation, and because a lot is happening beyond the budget. There is a bond inclusion, JP Morgan bond inclusion, so you are seeing the flow. Last week itself, our forex balance went up by $8-9 billion. So now I think they must have been waiting for the budget, and the post-budget, again I think you see the FDI and FI flow picking up. So my sense is that we are in a very sweet spot as far as the foreign flow is concerned, and budget is just about one of the small event on the way, and they basically maintain the environment, the positive good feel factor in the economy that has been fully maintained, and they have given a little more boost. So my sense is that tomorrow people will forget what has come in the individual taxation. And I think there is one more big thing about abolition of the buyback tax. Now and then the taxation will be in the hands of the recipient. I think that is a huge bonanza for the actually promoters. Promoters earlier were paying 20% tax at the corporate level, and if it has to be paid in the hands of promoters, then they'll pay only 12.5%. So my sense is, let's see what is there in the fine print, but it looks like a very big change.